Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see what we got going on here today. Let's get the Swiss franc up there. I thought it was kind of interesting. Swiss and the Canadian, they both turned, and I did look on oil this morning to see what was going on there. You know, it's a curiosity at this point in time. It seems like it's in a daily sell for 3 days. Let's just take a look at Swissy first. There's a Swiss right there. And you see it's moving down. That means the dollar is moving down. And, again, that would normally mean that we're seeing gold firm, silver firm, the oil firm. We would assume that. That would be the natural tendency. Let's drift over to, just real quick, to the crude. You see that? No, that's silver. Silver's moving down, and that's surprising me. It was showing some real good life in there. Oil is up a little bit here, but still pressing down. Look at the way that weekly is. I found that very, very, very curious this morning. It's moving sideways in here, and this thing is pressing hard on the downside. So, good morning, MGA. Good morning, George. How you guys doing? Or gals, or, everybody. Anybody and everybody. And so I'm finding it a little curious here. There's no doubt about it. We have stock markets at all-time highs here in the States. We've got the Federal Reserve speaking at 2 p.m. Eastern Standard Time today, releasing its notes, its minutes, that type of thing. I guess they'll see the twist in there or something like that. One of those crazy words that supposedly has everybody paying attention to them. Trying to think what else is there that sticks out very clearly as strange times. We are seeing, I know this is kind of odd to say, but we are seeing trading that goes on that has never been seen before. This QE era of the quantitative easing era of the central banks being the buyer of last resort and removing the funds is truly, exotic in many ways. And what is very not curious, but what is really interesting is this is a currency webinar that looks at also commodities. And there's no doubt about it. The currencies are probably like the most passive place to be at the moment. I mean, there's some real crazy going on in trading. Overvalues, undervalues. But when it comes to the currencies are pretty much, smooth in their slow, steady nature. Hey, 47, how you doing? Canadian, yeah, let's look at that. I noticed it slid into the sell, I think it is. Yeah, the sell. Let's see. Let's go over to the Forex there. There it is right there. Yeah. Oh, no, it's a buy. That's what it was. It jumped into the buy yesterday and is climbing up again. So it's losing value. And that would mean normally weakness in the oil sector. And also it would represent weakness in gold. And instead, look at gold. Gold is moving up. We've got products going in all kinds of directions here. Even like a little teeny weeny little gap up even. You can see it right there. Let's refresh that. I think I need to move that over too. Let me go like this. Just move that over just a little bit like that. And then I guess we go like this and fix that. I need to see this side of it also. Like that. So there, let's fix that now again like that. There we are. I guess that is seen on the screen there. Yeah, that's better. Okay, and so that, and then I guess I want to move this over. Yeah, there we are. Just want to be able to see the view so we can refresh it. And so we're seeing some action in here that is really breaking away from all the norms. But then we're in a quantitative easing era, and there are no norms anymore. The only norm we have really is the central banks are the buyer of last resort. Now, I guess some people are saying, what does that mean, buyer of last resort? Well, it used to be the funds, the mutual funds, the retirement funds, the specialists at the New York Stock Exchange or the specialists on the trading floors of other smaller exchanges were the buyers of last resort. In other words, orders came in to sell, and if there was no public bids no public bids, they stepped up and they bought. Now, they didn't, trust me, they weren't bidding it up, they would bid it down. So what that means is that they would buy at lower prices, not higher prices. Okay, and so they would step the bid lower, and they would be the buyer, and then they would be hoping that some public order would come through, and they would be able to sell it. And so that's what I mean by the buyer of last resort. Well, those days are gone. It's the central banks now that are doing all the buying. When there's sellers out there and there's no buyers, the Federal Reserve lends money to hedge funds and banks and says, here's a bunch of cash. And they know what that means. That's the code word for go buy some equities. And they become the buyer of last resort. And also there's rumors out there that the Fed has a third portfolio, and they're buying in that too themselves in open market. And they've even announced they buy equities. I mean, so they're doing it. We're just not seeing it. We don't know which broker they're using to do it through, but they're doing it. And so that's what that means by buyer of last resort. Now, when we go and look at the currency market, and that's what we really do here is we look at the currency market. You see the Canadian there. Let's go back to the Canadian. It's moving up here. There's that where it went into the weekly sell right here. And you can see it's slowly inching its way back up. It keeps on making lower highs and lower lows and so forth. And we're in a weekly sell, throughout this whole distance from here all the way over. But it's a real choppy, saber-tooth type of market in there. And the oil market, which, kind of cruises along with this, as this is weakening, right? This is weakening. Usually the oil market is heading down, not up. In this case here today, we look at it, and there it is. Where is it at? The oil market, that's gold. Okay, now gold. Now, that's interesting. Gold is now moving down also. Okay. So gold was higher, now it's going down. All right. And so we're seeing the pressure. We see this thing in a weekly sell of gold. Normally, that would be a sign of stronger gold. Is that right? Because if the dollar is going down, well, see, the dollar is going up against Canadian, but it's going down over against the euro. Let's just go over to some of these other pairs trades. So there's the euro. The euro is holding up pretty well here. There's some good signs there. Look at that. It's holding up very well, and we're actually flirting with the weekly buy. And it's been in a weekly sell since back up in here. I guess we could throw a line in there like that. So it's basically been the weekly sell since back in here. Now, the cable I saw this morning is rolling over. It's playing with the daily sell. It's got a sell thing going on here right now. And the weekly, which tried to get into the plus a couple days ago, seems to be backing off again. Whereas now we have the euro trying to get into the weekly buy. Interesting game going on here in the currency market, in the sense that we're seeing a nice amount of cross current, rotation, and at the same time we see it in the metals market. We see the crude oil, which again I'm really surprised. It looks like it really wants to find a way into a weekly sell, which could mean some weakness next week. Which you got to wonder, why are we seeing weakness? Is it all these taxes and this Green Deal thing that's going on with Biden? None of this is going to survive. I mean, no matter what he does to this economy, they're going to throw him out of office, and they're going to throw the Democrats out of office in the next 6 months. Or not 6 months, a year and a half from now. They're going to throw these people out. I mean, this is insane. None of this is making any sense. No one ran on this stuff. Democrats did not have a big victory. The only thing they had a victory is at 4 in the morning against Mr. Trump. I mean, they lost dozens of seats in the House. They picked up some seats with the same tools they used to knock off Mr. Trump. 4 in the morning wins, that type of thing. Something's really weird. That's why they're cleaning up the laws. All these states now are cleaning up the laws so they can't do that again, because something is just inconsistent out of this whole thing. And we're seeing some of the strangest stuff going on here. And when we go back to the oil market, it is kind of surprising. And then you try to put the currency pairs into that combination, and it still doesn't make a lot of sense what we're seeing here. So, all right. Like I said, this is going to be a very interesting year and a half, 2-year period. This is going to be very interesting. It will, the markets I think will do better going out, and right now they're just drifting up. They just drift right up. It's amazing. There's not a lot of, let's put it this way, quantitative analysis, what we do, matching up with the quantitative easing that they're doing, is pretty much one of the only ways you want to try to trade a market, because fundamentals are not even remotely close to anything that's going on at the moment. And that's a real freak out, you know? Do your screen not focus? Let's see, screen's not focused. Here? Which one's that, Andy? Right here? This is, what is this? This is the crude oil. You know, I have it, I guess I could widen it out more. Let's see how much more I can widen that without distorting it too much. There is that. Maybe here. I'm not sure. Let's take a look at Swiss over here on the J4X too at the same time. Can you see it any better now? There we are. Is it too small? Is this too small? Is that what it is? Here, it's coming. You'll see it in a few seconds here. Let me just make it bigger on the machine I'm looking at it on. That's not too bad. I can see it there. That seems pretty clear. That's all pretty clear now. Oh, you want to see that? You want to see that screen as a full screen for a moment? Sure, we can do that. Let's see. How do we do that? Like that, maybe? There we are. Like that. Here it goes. It's coming in. That's the oil market. You'll see it in a few seconds here. There it is. And I guess we need to move it over too. How's that? Nope, that did it again. Freaked it out. Let's fix this again. We'll get this fixed. Alright. Now, just want to move this over so I can see this side. How's that? Right there. That's good for me. How's that for you? Now, when I make it larger, like so, how's that? There we go. Check this out. Maybe you have to do a refresh or something like that. It looks clear on my. I have a. I'm not signed in on one machine in the office here, and I can see what you're seeing. And let's see. I guess I have to move that over a little bit more, like so. There we are. Let's see how that goes. There we are. Okay, so that's what that is when it's the full screen. Now we bring it back. Oh, that's wrong. Now, oh, I guess I can do that. Yeah, I go that like that, and then what I do is I minimize that like that. There we are. All right, now check that out. Hey, Robin. And that should be better. There we are. And you'll be able to see J4X and the fact check spreadsheet and the whole bit. There we are. Move that over a little bit more. There we go. One more time, like that. There we are. So you can see them all. Excellent. Excellent. So, yeah, there's a lot of wild cross current going on in here right now. And, you know, I don't know. Maybe it's because the Federal Reserve is releasing its minutes in, what's it, 5 hours, something like that. See, so 9 o'clock, 3, 5, 5 hours and 14 minutes. Maybe some are just stepping back. You know, sometimes it's smarter to do nothing. I always say that here on the webinar. You know, there's like 3 positions. You can be long, you can be short, or you can be in a neutral position of doing nothing, you know, not playing in either direction. And that's a position in its own right. So, you know, maybe that's why we're seeing a lot of sloppiness here today. You know, that would make some sense. And then going back to the Canadian, for 47. Right there. What we're seeing there is they're just pushing it up, selling down the Canadian. And then we're seeing the same thing. We're seeing the opposite in the euro and the Swiss. Both of them are holding up on really firmly. Some good firm action in those products. All right, let's stop off at the Turkish Lira, which has me a tad perplexed also. It's flirting with a daily buy. It's still not there. We can get rid of that one. And it's still in a weekly sell. And, it goes into the daily sell here, and it goes down and then jumps back up again. This thing's not following my mathematical norm of the last 40-some-odd years when it comes to, I would have thought it would have tagged that yellow dotted line. And, maybe it's going to make its next profit. And right now it's telling you to be short. And, it's at this point, the short was here. And we can put a little line in there. You can see the short was there. And now it's just a little above after a couple of days of where, as a matter of fact, the next day was the winner chicken dinner. And then it just, if you had a working stop, you'd have been already out of it. Because it took it right back up to where it got short, and now it's just sitting just a little bit above it. I'm going to remove the line there. All cleared out? Good. So that is the action that we're seeing here. The overall, the markets, and also I guess Credit Suisse, that fits you, Andy, with this Credit Suisse situation. They're slowly like a different piston inside of an engine. They're slowly unwinding the big loss, and Credit Suisse, it's amazing. There's speculation all the time. They go like, well, we could lose between $2.5 and $5 billion. That's enormous. I mean, I can hear, like I've said yesterday or the day before, I can relate to the idea of, we can lose 2.5 billion or maybe 2.7 billion. Not 2.5 billion or 5 billion. That's like demonstrative, the amount of risk they all had on. You can see it here today. Where's that at? There it is, right there. This is that ARKK, and that's to a great extent is kind of like the epicenter of it all. That's what you were really fighting. You know that now, Andy. This is what you were really fighting, is that leverage problem. When we went into the weekly sell here on that product, when we went into the weekly sell here, what you're really dealing with is the unwinding that was going on because of the margin problem. I guess don't ask me how, but maybe he doubled up in here, somehow or another. I mean, we're not getting a lot of the story, but you got to imagine you had this massive run and you had a dip. He must have, I don't know, maybe he bought big here on this dip and it popped up. That might have been him buying big. And then the next day it closed down and put pressure, then more pressure. But our math picked up the weekly sell-off. And maybe this is right here where he got his head handed to him. And then, I guess we've seen now over, I guess you could say, this time period, somewhere's in here. I guess that was the time period where he started they had to unwind. I guess this really put the pressure on right here. You would have to imagine that sell-off right there had to put the pressure on. They had to unwind him. And we knew that it was going on somewhere in this time period. So, it does make sense, doesn't it? And so our quantitative math picked up the problem up in here. He needed to be subscribing to Chicago Quant. Obviously, he needed to be I remember talking to one of these partners at Cowan and Company. They were, Julian Roberts was, I think they were the Tigers at one point. The baby Tigers were working out of Westport, I forget which brokerage house it was in Westport, but it was working out of one of the brokerage houses. And I happened to have my clerk at there at the time. We were doing soft dollars for Ulysses out of there. And somewhere along the line, the somebody from Cowan and Company was talking about some of the tigers that weren't too good. There was a couple tigers that weren't too good. Now this guy was an Asian tiger. What I mean by that is he was one of those that was based out of. He was basically trying to play the global market. So there were some tigers that were based out of Asia. There were some based out of New Zealand. There were some based out of Westport, Connecticut. Some were based out of Greenwich. They were based out of different places like that. And this guy, who was pretty sharp, took thin air and made $100 billion out of it and then lost it. I guess the story will finally play itself out. But this particular product, the ARKK, is truly the epicenter of that action. I think that's the best way to describe it there. So that's the action that's going on there. Now, for those that are trading currencies and don't understand how we drifted to this, this is the Archipelago or Arca something, where the fund that fell apart, and they're all taking it on the chin. Like Goldman Sachs lost, I don't know, a couple billion from it. Morgan Stanley lost a couple billion. I think they lost 12 billion total between the two of them. Now Credit Suisse is unwinding like 2.5 to 5 billion they've lost. It's a pretty hush hush. They're not really explaining the whole process. But what happened was someone was using things called they were using two different derivative products that are not legal in the United States, and we went through this last week. They were using something called TRSs. There are total return swaps, and they were using certified CFDs. And what it is that you benefit from the movement, but you're not paying the margin. So imagine if you're trading a $1,000 stock, and you bought a CFD. Okay, what you're trading, and you're getting the margin of what the movement is of the day, not the $1,000. So it acts like you're not trading a $1,000 stock. It acts like you're trading like a $5 stock. You can see how they could get in trouble with that. So their margin is nowhere near correct, and that's why you're seeing managers being, risk managers being fired right now at all these institutions, because they're saying like, you guys have no brains whatsoever. How do you let somebody trade with a margin of $5 on a $1,000 stock? And that's pretty much what's going on there. So anyway, that's where we are. We could be feeling it in the currency market on some level. I kind of doubt it. The currency market's pretty big. So I'm kind of surprised that we're seeing the action we're seeing. But that is what we're seeing here. And so this we have like a couple conversations going on here at the moment. We have a conversation about the fallen tiger, and we're having, we have quantitative easing going on. We have a lot of different things going on here right now. So you got to say to yourself, as a trader, an intraday trader, you need to have, if you're not trading options or binaries, and you're trading hard delta, the underlying product itself, you have to have good stops. You have to, you have to be disciplined, because this market is very thin, and right now, and very loose when it comes to its consistency about cross-matching against stuff. Robin wrote an article yesterday about it with the silver and the silver market. We have right now. Let's go over that. We're using the July silver now, and we were seeing strength in here. Went into a buy here. You can see that there, but we're in a weekly sell for weeks here. So all the way back to here. I mean, we've been in a weekly sell, and I think since January. We've been in a sell since the 28 area or 29 area or something like that, and it's drifted around up and down, and now it's flirting with a weekly buy. And then yesterday we thought, wow, we're in a daily buy, we're flirting with the weekly buy. Remember, the metals are a surrogate for the dollar. So in other words, you're not seeing pairs traders. You're seeing what you could call them like triads or a three-legged stool. So in other words, someone buys euros. Let's go over to the euro right now, and we'll use it as a good example. So the euro right now, let's go over to the euro right there. There's the euro. Euro's been in a daily buy since here, but it's still in a weekly sell. The weekly trend has been down, and we've been in a sell since, that's why our little line is right here. And so, in the end result is that if you're a fund or you're a central bank or whatever, if you need to buy euros but you don't have the room to sell dollars because the U.S. Treasury is defining who's manipulating their currency, so now you need to go, instead of selling dollars against your buy of euros, you have to go short something that's denominated in dollars. Okay, so what I mean by denominated in dollars is that gold and silver are traded in dollars. So what you do is you go short gold, and you short gold, and it has nothing to do with you not liking gold. It has all the fact that you're shorting it to be short dollars. Now, the moment you sell gold, you're at risk of two things: currency translation and the metal. So you can go and buy calls in gold. So now you've removed your risk of being short in gold. Now you're neutral, okay? But you're still short dollars because you're short gold. So you're buying euros, you're shorting gold, and you cover the gold by buying binary or calls on gold, or you buy platinum or silver. You do something on the opposite side of it. And at the same time, if you do it with a metal, you're offsetting your currency risk. But if you don't, and you just do the synthetic or the options, now you push yourself into being short dollars. Hence, you don't have to sell physical dollars. Hence, the U.S. Treasury doesn't label you as a currency manipulator. And so that's the whole game that's going on there. And so we saw this. We thought, okay, maybe this time silver is going to get some legs. And here you see this weakness here today, and you're seeing it in gold, right there. And it's down even with the green dot. You can see it's off. What did it do? It settled yesterday at 43, and right now it's traded as low as 31 and is trading at 38 at the moment, as you can see there. So that's what we're seeing here, and that's why it's a challenge to understand the currency market. That's why we use our math to make all decisions, and we don't use any fundamentals, and that's where we ride. So, all right, I think we've given a good amount of explanation. I hope I haven't been too deep in the weeds, as they would say. Let's drift over to the energy market. That's what we usually do after we looked at the Canadian. Oh, let's just double check one other too. Let's double check the NASCAD, because we see Canadian weakening and going up against the dollar. Now let's see what the NASCAD is doing right there. And NASCAD has been firm, so it's telling us that there's buyers for oil. So it's a real cross-match battle going on here. Canadian is weakening, and NASCAD is strengthening. And so we'll see what that action says. But more than anything else, oil is trying to move up. But again, we see the oil market. Go back to the oil market here. We'll look at the energies now. You can see here it's up from yesterday, but our weekly is really screaming. And you can see we've been in a weekly buy in this thing since the 40s, since all the way back in November. So maybe we're coming to something here. Maybe I don't know. Look at that. So, it has that A, B, C down, no real B up. I don't know. The things that Congress is talking about doing is not clear. Two Democrat congressmen came out yesterday. They need 3. The House of Representatives needs 3 to vote with the Republicans to knock it off. So far, 2 of them are having a problem. They can't vote for it. And now there's 2 senators coming out besides Manchin saying they have a problem with the bill also. So there's a lot of uncertainty in here. A lot of uncertainty in the energy market. Natural gas. I think natural gas is heading down again. Yeah. So we went into the daily sell. We're in the weekly sell. Remember, I think we talked about this on last week or on Monday. This thing is, it's a winner chicken dinner thing going on here. They tried to gap it up on Tuesday after Europe opened up, and it didn't survive whatsoever. Now it's blending in with the weekly sell that we have going on down in here. And we've been in the weekly sell since this area here in the 280s. So that's the action we're seeing out of this whole complex. And then we take a look at the oil market for the automobile, the gas fuel situation right there, which we need to start changing that too. That's the May contract, which is coming into delivery. And that's been in a sell from here. Let's put that in there. That's the sell. and it's really gone nowhere. It went the wrong way, and now it's gone. You can't take the short because we're in a weekly buy. You see that there? We're in a weekly buy. So, and that's been in a weekly buy for a while too, like the way the crude contract has, all the way back into the December, early December, whereas crude oil is in the November's area. A lot of action, lot of wild swings, a lot of political noise. That's what the problem more than anything else is. It's so nice when they don't talk and are on vacation, because there's a lot of political noise. They're trying to spend trillions of dollars. Mrs. Yellen, now our Secretary of Treasury, wants the world to be one big homogenous economic zone, with taxes and so forth. That's weird in its own right. I mean, I can't tell you how many ways we see strange events going on. So, in the end result is that the only way to really trade these products at the moment is short term, or with binaries and options, one or the other. And take your choice. If you're going to have a longer term position in some of these products, you want to do it through a binary or an option, because there's a lot of noise going on. A lot of strange noise. And what I mean by that is that there's a lot of political upheaval going on. We've got a government here in the United States right now that is acting like as if they had a mandate. And trust me, we don't consider that election anything near a mandate. I mean, there are so many Republicans that won across the nation and in the House. If it wasn't for the shenanigans going on at 4 in the morning, more than likely they would have not had a presidency or a Senate. So there is no mandate. This is desperation we're seeing, and it's very strange to the markets. All right, let's drift over to the currencies again. Let's see what the ruble's doing. Boy, they're really trying to create a problem with the. That's why the ruble's been in a daily buy and a weekly buy. Biden is really, what are they, lining up troops, trying to be tough guy? What a strange event is going on there. I don't believe we're going to see anything too violent, but I'm disappointed that we're having to put up with this gunboat diplomacy type stuff from Mr. Biden. What the first thing he did is bomb Syria for, I have no idea why, but he did. Of course, Iran is there and so forth. I understand that part, but I mean, it's just none of it's making a lot of sense, and none of his people make a lot of sense. They say some really strange stuff. I saw Zandy on there on the economic side yesterday. He made no sense whatsoever. I mean, none. Everybody's talking about him today. They're like, why does anybody listen to Mark Zandy anymore? I mean, the guy is not, like, way off course. And everything he said in the past is so wrong. If I was that wrong, I would not be doing the webinars today. If I was as wrong as Zandy, I wouldn't have been doing webinars for the last 8 years. He is so wrong all the time. Everything he says never comes out to be accurate. I mean, I don't understand it. It's some of the more stranger things. Here we have a fact-check spreadsheet on the screen here. I mean, you can see what our math is telling you. You see it right here. We have it all lit up. And it tells you how many days and weeks things have been in a trend. And, you can't, you match it to the chart. If it's right, you listen to me. If it's been wrong, you don't tune in. And a guy like Mark Zandy and some of the other people that Mr. Biden has in his administration have never been right. I mean, it's so strange. And people listen to them like as if every word they say is accurate, when in fact they've been so wrong for so long. It's so weird. Oh. All right, so there's the ruble. I can understand why my math has had it in a buy. They know that Mr. Biden is trying to create a problem, and we'll see how that plays out. Let's jump over to the yen. The yen went into the sell a couple days ago, but it's still in that long weekly buy. So chances of this being anything more than just a little correction is nothing but that, it looks like to me. And matter of fact, you can see today when we widen it, it's actually trying to firm up a little bit in here, but you can see the daily is still down. And the weekly, even with the white line breaking the time manifold, still in the plus zone. So see if it turns up by Thursday, going into Friday. And then let's check out the Mexican peso. Right there. in the daily sell, still with no problem. In a weekly sell with no problem. If Zandy could be even half as right as I am, I still wouldn't listen to him. It's amazing. Some of these people and the amount of sway they get. This is what happens when one party controls, 90% of the media. They sit there and talk like as if they're authoritative when in fact they have no track record whatsoever to trust. They can't put a fact check spreadsheet up on the screen as they speak because they'll be like, well, listen, you said this was going to happen, it didn't happen. You said that was going to happen, it didn't happen. You said the economy was going to go this way, it went that way. When was the last time you were right, Mr. Zandy? Honestly, it is amazing. All right, let's see. Where else do we go in here? I think they're the last of those three currencies, and then if anybody cares to see anything, we always throw it up. But right now, we've been following the ruble, the yen. We take a look at the Mexican peso, and there's you can see. Sometimes we look at the South African rand, try to get a flavor for the gold market. This going down is obviously a positive thing for the country there. And I think we went into the weekly sell right there, is it? So we're a week into the sell. Let's put that up there. I guess we didn't look at it this week. So you can see the pressure on there. Throw pink. Oh, not that. Let's fix that again. Right there. Let's widen that out too so you can see it better. And so the rand is moving down, gaining some value. I always try to figure out if that's relating to the metals market. Gold has been firm, silver's been firm. They're a metal-orientated marketplace. Been in a daily sell since here. Is that it right there? No, wrong place too. Let's remove that. So right there. Yeah, so right there. It's been in a daily sell since there. And so the weekly sell and the daily sell combined together has been a relatively profitable game. Right there, it's made money. Winner, winner, chicken dinner. Alrighty, now we go from this currency set and we jump over to the metals market itself, which we've already been kicking around to begin with. But let's just jump over there. And also let me save this so next time I come here, those lines are still there. And then you can see right here. Like I said, you see silver moving down, but a little bit more hopeful. You can see that because it's playing with the weekly. We see gold still having its issues trying to get into a weekly, and as much as it was nice and firm and protected the shorts from getting beat up, it's not really giving us any real strength except for the short-term strength we're seeing right here. And then let's go take a look at the copper industry. All that electrical armature new green deal thing. Yeah, you can see here it's flirting now. It's dropped even more since this morning. And you see the pressure on the copper market here. You see that pressure down. So we'll throw that up on there like that. There we are. And it's in a weekly sell from this area here to begin with. And what's funny is it went into the sell, and before it even got into the weekly sell, it jumped back into a weekly buy. So this has been a neutral position throughout this whole event. It's been in a buy from here and a weekly sell from there. So you can't be long or short, and you've had some really wild action out of it. 15, 20 cent moves. And now it's starting to join in. I think we talked about this last week. If this thing gets into a daily sell, this could be a nice little correction down to this low in here, or at least that low. So we'll see which one, that low or that low there. And we'll see how that plays out over the next few days. Again, facts are facts. We'll see how Doc's math takes us, which has the 8.5 out of 10 accuracy level. Now we'll take a look at the last product of all, and that is the platinum right there. Now platinum's lifting. Look at that. Now we consider this the Janet Yellen spread. We've been talking about this since it was up over $1,000. Now it's trading at 500. So we've been very accurate at picking out Mrs. Yellen's policy. You can see here trading at 1248. Let's throw it up on J4X. Let's see where gold is right now. right there, trading at 1737. So you subtract the two. 1247 from 1737 is 490. So this product is down near its lows now. It's been hovering in the 550, 530, 520 area. Now we're in 490 area. This product is Mrs. Yellen is going to bring the platinum up against the gold. She did it when she was Fed chair, and she's going to do it again as Secretary of the Treasury. So that's what we're seeing here. That's why we've been, promoting this. Matter of fact, Robin, we talked about this in the webinar. We wrote an article about it. You wrote an article about this about 2 months ago now, right? That's what we should revisit. We should revisit that one and talk about that. I'm going to take a bite of an apple here. I just had a hankering. I have an apple sitting on the desk. I just took a bite out of it. But you can see here, July Platinum acting very firm, and the spread's now down into the 490 area. I think it's going to go to 250. And it seems like the last $250 to $300 has been the grind. Boy, did they gave us like $400 and some odd dollars really quick out of it. That was kind of neat. And we should go revisit that, we talked about the silver, but this is the Yellen spread. And boy, has it, it's been a masterful spot. I'm surprised more people didn't. Well, obviously they did, because we're seeing, I'm the only one that's talking about it, but we're seeing, no one's talking about it out loud. I haven't seen anybody write about the spreads, the platinum spread whatsoever. All right, let's drift over to, where do we go from here? We drift over to, let's see, that's the metals market. Okay, so then what we do is we go now to the stock indices. And there's the NAS 100, which on Dukascopy, we'll put that up on the Dukascopy screen. And that is that's the Tech 100 over there. You can trade it off of Dukascopy. Right there. Now this product here is the everything that makes society function nowadays is this product. So wireless networks, chips, e-commerce, software, electric automobiles, everything that's, the forefront of our society's economic is here. Nikola Tesla, or Tesla with Elon Musk rockets, the whole bit. I think people buy into the automobile company to be, he owns the rocket company. And so there is no stock in it. So people buy into, there's talk that one day he's going to merge the car company with the rocket company. And so that's what puts the life into the rocket company. Also, there's also the underlining rumor that there's an asteroid not too far away that has over $1 trillion in gold on it. And there's serious talk that he's going to send a ship there to mine one day. And so there's a lot of little quiet underlining themes that are going on between the rocket company, privately owned by Mr. Tesla, not Tesla, Mr. Musk, and the car company. And that's why you see all that strength in the car company. Because, right now, the car company, Tesla, is something like it's valued equal to the next 9 car companies put together. So in other words, you put General Motors, and you put Volkswagen, and you put Ford, and you put, Maserati, and you put Nissan, and Toyota, and you put all those car companies together, and the other 9 car companies don't have the same market cap as Tesla. So obviously they're buying the car company for specifically other reasons more than the idea of how many vehicles they're going to sell. So something's brewing there. And we've known this now for a couple of years. And we talk about it here once in a while during the webinars, but overall, when you look at the NQ or the Nasdaq 100, that's the type of things that are powering this. I mean, I remember Microsoft trading in the 30s and the 40s up until about I don't know, something like right a year or two after the quantitative easing. It all of a sudden it found its way up into the 70s and the 80s, and now it's a $200 stock. So amazing how it could drift around in the 20s and the 30s, and then all of a sudden quantitative easing comes alive, and now you have it trading. In other words, there's a what we refer to as an asset inflation that's going on. In other words, they're always talking about inflation, inflation. Where's the inflation? Well, trust me, it's in the assets. The assets have exploded in value. I remember Whirlpool, or Maytag, the one that makes the dryers for manufacturers washers and dryers. It was a $25-$30 stock. It's a $200 stock now. I mean, really, can they sell that many things that justify that PE? Honestly, I mean, none of the fundamentals anymore are even remotely close to a reality. None of them are. They are so far away from reality when it comes to the old-fashioned PE, price earnings ratios, and future earnings and so forth. It is so far away now that technical analysis is literally the main theme to how you trade. All right, let's check out the S&P 500 right there. That's also on the Dukascopy J4X. You can see it on there. That's right above the Tech 100 right here. And there it is right there. That's the cash. I think that's the cash, or is that the future? No, that's the future. The future is trading where? Future is trading at 60. And that could be the cash. That's probably the cash index. And so that's there. You can see here that the product is very firm from the daily buy here and the weekly buy. It's been your winner chicken dinner. Very strange action for all-time highs, but that's what it is. Then we drift over to the Dow Jones Industrial Average, which is obviously we've mentioned this many a time in here. It's in its weekly buy from back here. Surprised we don't have a line there. Let's put a line in there. And the Dow Jones Industrial Average used to be the New York Stock Exchange pillar of advertisement of how the markets are going, and they still do use it like that. But now it has 6 of the Tech 100 stocks in it. So 6 of the Tech 100 stocks is in the Dow 30. So there's 30 Dow stocks, and they were for 150 some odd years. They were 120 years. Let's see, Civil War was 1865. So we're looking at 135, 155, about 140 years. This index has been around. It's been an advertisement tool for the New York Stock Exchange, but now they've incorporated 6 of the Tech 100 stocks, which are Nasdaq stocks, not New York Stock Exchange stocks. And so this is a whole different type of creature, and it's not a cap weighted like the like the S&P 500. It is a divisor weighted. So in other words, if a stock goes up $1, it represents about $8 move in the index. So when you have Microsoft in there, and at the same time, I'm not even sure who could be the cheapie in that whole complex. Let's take a look and see. Who is the cheapie? We'll take a look and see. I mean, I bet all these stocks are hefty. Let's see. Data. Market Lab. PDF. All right, here we go. I'll make that bigger, and we can put it up on the screen real quick for you to just get a flavor of it. I guess that's it right there. There we go. So these are the stocks in the Dow Jones Industrial Average. You can see the first. Oh, I said right. So 3M. Let's see, they're just showing how much they were up and down. Let's see if we can find the actual value of them. No, they're not showing us the actual value. That's just how much they're up or down. I wanted to actually show you let's see if I can find another spot where it shows you the components of it. But we have Amgen in there. That's a Nasdaq stock. And Microsoft, like I said, is a 200 stock. Who's the cheapie in there? What company is low in price? Let me see. Let me put my glasses on. I'll spot it. Okay, there it is. Okay, now we've got it. Book value. Let's see. Boeing. No, they're not doing it. Still not. Travelers Insurance. They're showing book values, dividends, and earnings. Let's see if I can find the actual prices of the stocks. Nah, just a list of them. Book value of Chevron is $76, whereas Caterpillar is $26. So they're just looking at the that, but they're not looking at the values. We'll have to look at another day. I think we're running out of... No, we got some time here. Anybody have any questions while I'm doing this, look through the universe thing? Excuse me. Let's see. There must be a page here where it shows you all the prices, the actual prices of these stocks. Not there. Not there. You can see some. No, that's not it. Nope, I don't see a spot that shows us the actual prices of the stocks themselves. They're telling us all the internal workings. Not there. I'm scrolling through the whole laboratory. Not there. I would love to be able to see just the individual stocks themselves, but they're not. They're only showing you how much they go up or down in value. Oh well. We'll have to find another page that shows us that at another webinar. I don't want to chew up too much time. So yeah, you can see here, they're all all-time highs. Cash is pouring through. There's so much cash out there. So we see a strong market. There's nowhere else to go. When you have the Boone trading at a minus, you have the Exchequer trading their 10-year at a minus. You see the French franc. No, I think the Exchequer is actually the 10-year, and that is actually a plus by a quarter percentage point. You see the French bonds at a minus. I'm sure the ECB bonds are trading at a minus, and they say there's close to 18 trillion invested in all that minus investment. So money has to run somewhere, and so what they're doing is they're running to the stock market, since the central bank is holding the markets up, keeping them firm. Buyer of last resort. All right, and then last but not least, something that's really changed its tune, and that is the Russell 2000. And you can see here, Russell is not at its all-time highs at the moment. It's still like the Nasdaq, but Nasdaq is not at all-time highs either. It's battling to get there, but it's not there yet. See, there's the all-time high right there. So both of those two are really fighting to get back up to the all-time highs, whereas the Dow Jones Industrial Average and the S&P 500 are flirting constantly every day with all-time highs. Sound like Captain Kirk. I will. Yeah. Yes, indeed. All right. So that's the view of the indices. Now let's go over to Bitcoin, which someone was talking about that again yesterday. I know it. It was Robin and I were talking about Bitcoin yesterday, and saying that the only weakness of Bitcoin is not the pyramid structure of investing. It's the and you can see we're heading into a weekly sell here too. I think we closed in the weekly sell last week, right? Yeah. Is that a plus or a minus? That's a minus. So we closed in a weekly sell. It's a fact check spreadsheet. Yeah, right there, line 28. And obviously they're playing with the daily sell here today. The only risk of the Bitcoin, as far as I'm concerned, these cryptos or the Ethereum and so forth, is technology itself. Nothing more than that. When you buy gold and silver, you can put them in a bag, and if the electricity goes out and doesn't come on for whenever, it's okay because you have a physical. The only problem with this is that this is just a different asset class in general, because you got to figure, if Bitcoin goes, so does IBM, so does Apple, so does Microsoft. In other words, in many ways, the cryptocurrencies are in the same boat with the major stock that trade. The companies themselves. Because if we get pushed out of a modern society, we have an astronomical event that goes on that messes up our electrical grid and so forth, and computerization. Then what happens is the metals become we fall back to the metal situation. And you got to figure at the same time, if all that disappears, then obviously all that debt that was outstanding disappears with it. So there's a lot of strange concepts to deal with when it comes to understanding the cryptos. The cryptos, to me, are equal at risk with everything else. I don't see the pyramid structure of it being the problem. It's the technology side of it that I see as the problem. In other words, no electricity, no computers. That is the problem. And with it, I didn't say this to Robin yesterday when we were having this discussion, but at the same time, the world stock market disappears and the world bond market disappears also. All of a sudden, all that debt just disappears because no one can open up a machine to confirm it, to back it up. So it's like it starts from scratch. And what's our number one product that and that is the physical of equity. And the physical equities you're talking about, food and 22 caliber shells and gold, silver, and platinum, and copper and so forth. They're the more important things at that point. So it's just don't be afraid of the cryptos because they're what they are as a new asset class. That's not their problem. That's for sure. That definitely is not their problem as far as I'm concerned. All right, well, traders, that was it. We just have to come up with a title for today. And I think we'll wrestle with something like that. Everybody have a safe and smart day. And be careful. We got noise coming out in 4.5 hours. So it could be a little jumbly of a U.S. market. So this is Doc from North America saying arrivederci. We will catch you on the flip side. And that is happy trails to you until we meet again, which will be Thursday, because today's Happy Hump Day. Happy trails to you, to all.